The Bitcoin price has continued to fall on Tuesday, extending losses all the way down to levels not seen since January, retracing below 30,000 for the first time since the start of the year. We're speaking with Saifedean Ammous, author of The Bitcoin Standard, and now his new book, The Fiat Standard, and an independent educator at Saifedean.com. Dr. Ammous, welcome back to the show.
Thank you very much for having me.
Saifedean, we're going to talk about all things Bitcoin, and I want to talk about, of course, your new book, The Fiat Standard, and what readers can learn and expect to learn from you. But first, let's talk about recent news. China, as you know, has been cracking down on Bitcoin transactions, essentially making over-the-counter transactions almost illegal. And of course, that has brought the price down to multi-month lows. What do you make of this news? Is this a concern for investors, or should people just shrug it off?
Well, it's a little bit difficult to say so early because it's we've had plenty of these false alarms before, particularly from China, where we hear news that says things along the line of Bitcoin is going to be criminalized, and then a few months later you hear it happening again and again and again, which shows that it hasn't really been quite effective at achieving its goals. It seems like this time is a little bit more serious. We've had many China bans before. It is a joke among Bitcoiners that China bans Bitcoin. It's banned Bitcoin 50 times at least so far. And every time it turns out that maybe either they go back on the decision, or that it wasn't really a ban. It was a ban of a particular operator or a ban in a particular region. But it looks like this time it seems to be much more serious, and we can see it in terms of the hash rate declining. So a lot of miners seem to, in fact, be going offline. And also we can see it in terms of the price. And I think it makes sense that if this would happen, we would witness a decline in the price, because, these miners were essentially handled a very massive business shock, where their business have to stop operating in China, and they need to find a place. They need to find somewhere else in the world where they can relocate. So that's a huge new expenditure that they need to come up with. And basically, if you're a Bitcoin miner, you're in that business most likely because you have high conviction in Bitcoin and you want to hold Bitcoin. And so when you are subject to a crisis like this that creates problems for your operation, the thing that you will have to sell is most likely going to be Bitcoin, because you have a lot of Bitcoin. So I think it seems like the impact is that miners are having to sell a lot of their coins. They're having to liquidate a lot of their coins in order to finance the move of the equipment, and that seems to be quite serious. Now, in terms of what's really not clear is the banning of transactions. I'm not so sure how that's going to work out, because we've heard that one several times before, but it has continued. And of course, it's this is going to put to test Bitcoin censorship resistance, because sure, governments can ban transactions from their financial system into Bitcoin. But the question then becomes, what can they do about people transacting Bitcoin directly for goods without having to go through their financial system, or people using physical cash and transacting Bitcoin with it? So, with time, as the Bitcoin network grows, as the size of the Bitcoin economy grows, the ability of people to conduct trades with one another based purely on Bitcoin increases, and so these bans can become less effective. So it'll be quite interesting to see how this one unfolds. I tend to think that it's likely going to be a short-term, medium-term impact. I think it doesn't change anything in Bitcoin in the long run, because of the economic properties of Bitcoin and the way that it works. I don't think I think it can handle a shock like this.
I was reading the news, and according to a state-run Chinese newspaper, 90% of China's mining capacity has been shut down over the weekend. Now, I was reading also that 65% of global Bitcoin mining comes from China, and you were talking about the hash rate. That's reflected in the hash rate. It's been declining ever since May, and it's really taken a dive in the last couple of days to weeks. Now, correct me if I'm wrong, Saifedean, but shouldn't the logic be that once you have less mining, you bring up the scarcity of the coin, and the price should increase? Why are we seeing the reverse happen?
Yeah, no, that doesn't quite work like that in Bitcoin,
Yeah.
because in Bitcoin, the reward for mining, the amount of mining that's going to come out every day, is independent of the number of miners that come in. That's what makes Bitcoin unique. And that's a key point in my book, which is
Hmm.
Bitcoin is the first good whose supply is completely independent of demand. It doesn't matter if 5 people are using Bitcoin today or 5 billion people are using Bitcoin. It doesn't matter if 5 people are mining Bitcoin or 5 billion people are trying to mine Bitcoin. Every day in this year, we're roughly getting, in this 4-year period from last year until 3 years from now, we're getting roughly 900 new Bitcoins a day, or about 6 Bitcoins every 10 minutes. That's going to remain constant regardless of what happens with the quantity of mining. There is a period of adjustment every 2 weeks. The difficulty adjusts. And so there are times where it can be faster than 10 minutes or slower than 10 minutes. So to get more than 900 or less than 900 every day. But roughly it's going to be around 900. So what ends up happening is that the way that Bitcoin mining works is that the reward is fixed. And then the difficulty of the mining adjusts depending on the number of people who are mining, in order to ensure that the reward is not exceeded. And so I like to think of it like a sports competition, where as opposed to, say, gold mining, where there's the amount of gold that is mined is a function of how many people are mining and how many people are digging. So
Yes.
you have a lot of people going into mining Bitcoin or copper or any natural metal. They're going, the more they dig, the more they make. And so the more demand there is, the higher the price rises, the more production rises. That doesn't work with Bitcoin. What happens with Bitcoin is the more people get in, the prize is fixed. It's more like a sports competition. So if more people compete to win the World Cup or the European Championship or the 100-meter dash at the Olympics, the more people compete, there's still only going to be one trophy or one medal to be given to the winner. And when more people compete, only thing that happens is that it gets harder for you to be the one who wins it.
Okay, so the price decline is not a reflection of the supply of Bitcoin, but rather a reflection of maybe investor sentiment on the use case of Bitcoin. Would that be a fair statement to make?
Potentially. I mean, I am not so sure about what is happening with Chinese investors or with other investors, but yeah, most likely there are people who think that this is less attractive as a
Yeah.
prospect right now. But I think probably a significant part of it is the cost of relocation for miners. Miners need to sell a lot more of their coins now because they need to relocate, and when that happens, they are you're forcing some very hard hodlers who would usually be holding very hard Bitcoin for the long term. You're forcing them to sell large quantities, and I think this can be very significant on the price.
Now, Saifedean, as you may have observed, of course, the transaction fees for Bitcoin and also Ethereum have also gone up a lot in the last year. In fact, if you actually put the chart of, let's say, the transaction fees of Bitcoin and overlay that with the price, you'll notice a correlation. Why is it that transaction fees are somewhat correlated to price? And do you think the high fees have anything to do with the correction of the price of Bitcoin that we've seen over the last few months?
The fees have been rising over the past year. I'm not so sure that the last few months have made a big dent in rising. In fact, probably the other way around. You're right that there is a correlation. When the price goes up, the fees go up. And that's because, when the price goes up, that means more demand for Bitcoin. And Bitcoin is fixed. There's no way of making more Bitcoin beyond what is already scheduled. But another thing that's also scarce and fixed, like Bitcoin, is Bitcoin block space. So there's only so many Bitcoin transactions that you can fit into every Bitcoin block. We have one block every 10 minutes, and each block is roughly around 1 megabyte in size. So there's only so many transactions that you can fit into it. And so when there is high price movements, when price is rising, that means more people are buying, more people are transacting, and that means more demand for block space. And so block space transaction fees rise. And I think, the way that I see it, I think Bitcoin transaction fees are likely to rise a lot more over time. If Bitcoin is going to succeed, it's not going to increase the number of on-chain transactions. On-chain transactions can't increase by much. What's going to happen is that the value of these transactions can increase, and the transaction costs will increase. And that's why in the Bitcoin standard, I argue it's better to think of Bitcoin as a settlement network rather than a consumer payments network, because there are very hard limits on how much the network itself can handle. And of course, I'm referring here to the network on-chain transactions. Second layer transactions like Lightning don't involve paying the on-chain transaction fee, or at least you pay them only when you set up a channel. With these transactions, you're going to see more of the consumer layer. It's more like a consumer payment network.
Okay, let's talk about the Bitcoin standard now. For those people who have not yet read the book, your central thesis, of course, is that Bitcoin is a decentralized network. No authority can control it, and you've outlined the historical context of the rise of Bitcoin. Now, if I were to tell you, Saifedean, not all governments agree with your assessment, how would you respond?
Yeah, I think generally, I think governments will be the last to see Bitcoin, and I think that's hopefully a good
Well,
thing.
I think El Salvador would agree with you. Let's just put that on the record.
Yeah, El Salvador would agree. I think that was a bit of a surprise for me because I thought, governments would be the last to get this, but the El Salvadorian president seems to have done a good job about it, because people who work in government in general will be highly likely to believe in the power of government. And one of the most important ideas about the power of government comes from what is called the state theory of money, which says that money is whatever the government says is money. And so government decides what money is. So if you work at a central bank and if you work at a government, you're highly likely to ascribe to this idea that money is whatever we say it is, and money is whatever you can pay your taxes with. And so when something like Bitcoin comes up, you just cannot take it seriously. You have a very hard time taking it seriously and being able to think of it as a serious alternative. And so I think, governments are not going to be big fans of Bitcoin. But this is, the contention that I make in my book is that it's not about convincing people. This is economic reality. This is the hardness of money. And so the point I make is that, gold did not become money because it won a popularity contest, or because it had a good marketing department, or because it had a good team of devs who were working really hard on, making good PR for gold to be adopted. Gold won its role on the market because it has properties, physical and chemical properties, that make it work well as money. And a lot of people misunderstand money, or are ignorant of money, and they talk about it as, well, money is just a hallucination. Money is just a shared hallucination that we all share with each other. If we all agree that we're going to be using toilet paper as money, then we can make toilet paper into money. If we all agree that we want to use fish as money, then fish is money. And that's not true. There are properties that make toilet paper and fish useless as money, but that make gold very good as money. And I discuss this in depth in the Bitcoin standard. And the point from discussing this in the Bitcoin standard is that the same thing is repeating with Bitcoin. What makes good money is also present in Bitcoin. Bitcoin has the properties that make good money, and fundamentally, it's about the hardness. It's about the irresponsiveness of the demand, of the supply to the demand. And so gold was the best metal for that, because it always had the lowest annual supply growth rate, and that's what gave it its key monetary role. Silver had the second highest annual supply growth rate, and that's what made it the second monetary metal. But Bitcoin has an even lower supply growth rate, or it will have a lower supply growth rate over the next couple of years. It's going to overtake gold. And so it's going to become the hardest money that we've ever had. And I think it really needs to continue to function, and then economic reality will just assert itself. 10 years from now, there's only going to be about 20 million Bitcoin in the world. From now, there's only going to be about 121 million Bitcoins. 100 years from now, there's going to be only 21 million Bitcoin. But 10 years from now, there's going to be a lot more dollars, and there's going to be a lot more euros, and a lot more of all the world's national currencies. And also gold, and also bonds, and stocks, and debt, and all kinds of other financial assets. There's very little restraining the ability of the people who produce them to keep making more and more and more of them. And so I think it's just a game of supply and demand that's going to impose itself. We're not making more Bitcoin, or we're making very, very little more Bitcoin, but we're making a lot more of everything else. And demand oscillate, and there will be a lot of short-term oscillations in demand, like we see today. We had more than a 50% drop over the last 3 months. But I think the long-term trend is still very clear. It's undeniable. We've had an average of about 200% per year cumulative annual growth rate over the first 10 years,
Sure.
first full 10 years, full calendar years in which Bitcoin has operated. So I don't see that trend subsiding unless somebody figures out a way to make more Bitcoin. And if somebody's trying to work on that problem, I wish them the best of luck.
I've interviewed some Bitcoin skeptics. I've also heard arguments from other people commenting online and otherwise against Bitcoin. I'm just going to throw some arguments out there that they've made that I'd like you to comment on. Some of them you've already addressed. So going back to the Bitcoin as a form of payment thesis that you've mentioned, yes, it's true. It's undeniable that Bitcoin's adoption as a form of payment is picking up. Commentators have noted, however, that Bitcoin's use in the illegal, illicit finance world has also increased, and that should also be a concern for investors and speculators of Bitcoin. Can you comment on whether or not that should be of consideration at all?
I mean, I think, it's a technology. Bitcoin is a technology. Bitcoin is not a company. And so it's not like PayPal is facilitating money laundering or HSBC is facilitating criminal activity. And then because you don't like that activity, you take your money out of HSBC. Bitcoin's different. Bitcoin is a lot more like somebody carried out a crime with a knife. Do you go and do you get rid of the knives in your kitchen because, knives are being used for crime? It's different. It's a technology that's neutral, that doesn't have an authority that controls it, and anybody can use it. So it makes no sense to make to make yourself responsible for how everybody uses everybody else uses it. So you can't be held responsible for what knife users do or for what drunk drivers do as a car driver. And I think the same applies for Bitcoin. Having said that, I still think a lot of criminals are in jail because of Bitcoin, because they use Bitcoin and they overestimate how private Bitcoin is. They don't quite get that privacy on Bitcoin is not an easy thing. It's not that Bitcoin is private or that Bitcoin is not private. It's similar to thinking about privacy on the internet. Do you have privacy on the internet? Well, it depends on how you're covering your tracks and who's trying to track you down.
Yeah.
And it's an endless arms race, effectively, between sleuths and people trying to get away from them. So it's you can achieve privacy on the internet, but it's pretty on Bitcoin and on the internet, but it's pretty difficult and it requires expertise. And generally, I always like to advise anybody who's in crime, if you're in crime, stick to the US dollar. It's a more tested and reliable way of
you hear that, criminals? Saifedean has advice for you to launder money. Stick with the US dollar. Saifedean, you're right, but authorities use this as an opportunity to regulate Bitcoin. I think if you take a look at Elizabeth Warren's testimony to the Senate Banking Committee just a few weeks ago, she said that, and I quote, Bitcoin is used to scam people, and she threatened more regulation. Suppose the government does impose more regulation on Bitcoin. Some say that might be a good thing for the financial asset, but what do you think would happen to the price? Do you think we'll have another incident like what's happening in China, where people might sell off the holdings in fear?
Potentially, yes. I mean, I think, sell-offs in Bitcoin have happened, and I think they're going to continue to happen for a long time, as long as Bitcoin is still a tiny part of the global financial system. So these kind of things can happen. But I think it might get ugly with Bitcoin, but I think the value proposition ultimately is in the fact that nobody can control it, nobody can stop it. And so in a sense, Bitcoin thrives on adversity, because if you do try and knock it down, if you do try and hurt it, you're just setting up a great comeback story for Bitcoin. And this has been the case with all the over the many years. There's been many cases of, well, that's it for Bitcoin. China just banned it, or the US just shut down the Silk Road website, or the G7 announced that they're not happy with it. And many times this appeared like it was going to be the end of Bitcoin, and then Bitcoin comes back and recovers. And I think we're going to see something similar now with the hash rate recovering.
Yeah.
We get a discount on the coins to finance essentially the move of the miners, and it's going to reduce the amount of money that the miners can hold. So it's going to have some impact on the price. But I think the dynamic itself is going to reassert itself. There's only a fixed number of coins coming on every day. And the fact that that continues to operate reliably, and the fact that, essentially half of the, roughly half of the mining capacity of the network probably was in China. And if that indeed does leave, I mean, I think it's just absolutely an amazing portrayal of the power of Bitcoin, that you can relocate what is an extraordinarily large amount of industrial capacity from China to all over the world without the network having to be taken offline for 10 minutes. The network is still making blocks every 10 minutes. Maybe the blocks are going to get a little bit slower over the next couple of weeks as this relocation takes place.
Yes.
But you can still use the network. The network's still operational, which is amazing. So whatever they're going to try to do, ultimately, and this is what's different between Bitcoin and gold, and what's different between Bitcoin and traditional financial assets, Bitcoin's clearance happens independently of the political and banking system. Bitcoin has physical clearance, if you want. It's digital, but we can refer to it as physical in the sense of clearance with metals. There's paper gold and there's physical gold. There's paper gold, there's paper Bitcoin that exists on the balance sheets of regulated financial institutions, just like there's paper gold. But the difference is that the physical Bitcoin market, effectively, or the on-chain Bitcoin market, is conducting one global, is adding one new block of thousands of new transactions taking place all over the world every 10 minutes. So every 10 minutes, you're updating the ledger with new transactions from all over the world, completely independently of any kind of political authority. And so that means that, if you can't kill that, if you can't stop these members of the network from coming together, which, even if you ban mining, you can't stop it, as we're seeing right now. If you can't do that, if the network can continue to operate even as this is taking place, well, then all that you can effectively do is is basically ban yourself from the network. So you can't stop the network. You can either try and impose terms on people who use the network, and if people can accept that terms, they can continue to use it and deal with your institutions. But if you impose terms that are unacceptable for users, or that people cannot accommodate because of the way in which Bitcoin works, then you've just kicked all of your users off the network, or kicked all of the Bitcoin users off of your network, or off of your central bank, or off of your taxation system. So you can't really ban Bitcoin. You can ban yourself from Bitcoin, but Bitcoin continues to operate. And I think, even if it's going to be a 50, 60, 70% crash, 80% crash, I think ultimately the ability to bounce back is what's going to just win the day for Bitcoin.